Ira Epstein of Linn and Associates with your SPDR ETF wrap-up for this Monday, and we're at the 30th of November, the last trading day of the month for 2020. Now, there's a phenomena that I know goes on. How do I know it goes on? Well, I've been doing this now in either the stock and or commodity arena for over 50 years. I have owned my own stock firm. I've owned my own commodity firm, still do. And what you learn about this is how money managers operate. And how they operate is pretty simple, and I don't blame them. They work hard to get a return. You get a big month like you just had in November at the end of a year. So you get a 12% return this month alone in like the S&P and some of the other indices. I think they ring the bell today. They cashed in, and I doubt they're going to put a lot to work until they get to the window dressing part of December. So they're not going to probably do too much. Why not? Let's assume that they made X percent. Let's just assume that they even made just 12% for the year. Like some of the indices did. They want to get paid, and they get paid on a combination often of what they made for the year. Some get paid on a monthly basis, some get paid on a yearly basis. Everybody's got something different. High points get measured and the like. My point of this all is, don't look for a lot of risk-taking in December by a lot of these managers and expect that a lot of them did what I said, cashing in. I certainly would have, and I don't see why they wouldn't. All right, so looking at that, the down day today, well, is it the beginning of a trend or just what we talked about? We'll find out. I've decided to add something new. I'm getting bored, so I want to do things a little more interesting. I'm going to add commodities, what I want every now and then, and you are invited to write me, either direct for ones you want me to cover at iepstein@linnllc.com. You can also just post it on the, if you're watching me on YouTube there, and I'll choose what I'd like to give you. But PAVE struck me as something interesting, and the reason it struck me there is I believe infrastructure is going to be a monster play this coming year, maybe the next couple of years, as the economies try to get their footing back. We know that the vaccines in Chicago, they delivered today, I understand, 40,000 doses. Now we have to hear from the CDC and others as to how they recommend it being put out into the open, if you will, marketplace, not for sale, but who's going to get it first is what I'm saying. Is it going to be those that are sick and elderly? Is it going to be the frontline workers? Who's getting what out of these first doses? So that's going to be very important. More important to me, even than that, is that they're already saying that between April and June, the massive part of our population should be able to have been vaccinated at that point or getting vaccinated. And now I'm hearing something else, that they may want to tie some of the stimulus money that's out there to people getting the vaccine, because so many people have said they don't want to take it, they don't want to be the first ones, so maybe they're going to tie $1,000 to a family and so on. I was reading one of those reports today, so there's a little bit of everything out there. So in looking at PAVE, this is your global, and you can see what it is, ex-U.S. Infrastructure Development ETF. This is your daily bar chart. The market is filling some gaps in there. There's more to go if it wants to fill them further. When you look at the chart on a swing line basis, remember what a swing line is. It's an indicator that I wrote so that I could easily look at any chart and see, is it trending? What's the risk associated with the trend? Then I start filtering it. So in this case of this, I have a distinct pattern of higher lows and higher highs. Where I went to school, that's called an uptrend. I filter it by seeing where the market's at in relation to key moving averages. The market is over the 18-day moving average of closes, and this average is going to jump up tomorrow. Today it's 1968. Yesterday, if I can get this to do what I want it to, come on. It doesn't want to cooperate with me. I'll have to go back a day. There we go. I know how it works when it does that darn machine. It was 1959, the day before 1945. So 9-10 cents a day is what it's jumping. So that means it's going to be very close to that low tomorrow. That's all that I'm saying. We'll see where the support comes in there, but that's the zone I'm looking for. I'm also looking to see the resistance point. It's the upper Bollinger Band. This market has shown a good tendency when it gets to that band to pay attention to it. It can run it, bands do that, but it doesn't stay over it very long. So I liked what I saw right away on that. And then I looked at momentum, and you just lost the embedded reading. Now, if you keep the embedded reading lost on day 2, if you don't gain it back right away, and it could gain it back, it's at a 77 reading, you get up tomorrow, let's say 50, 60 cents, you could get that. We'll see. But my guess is because you close near the low of the day, it's not going to work that way. The market's going to keep trying to be lost, and I think it's going to make a run to that 18-day average. So that's what I'm looking for. I think that will be the interesting number of the day, and it wouldn't surprise me if the pros down there look at the market, but do I think they'll do anything? Let me come back to that and explain why not. Markets that lose an embedded reading become at first overbought. So when you lose a reading, you become overbought, then you either get oversold or you get down to a neutral area. I don't think they'll be aggressive tomorrow at 1979 is my point, but we'll see. In SMH, the market still has a fully embedded reading. The pattern is still one of higher lows, higher highs. Look for solid resistance, 209.73 in this market. Any move under today's low, which was 203.98 on Tuesday or Wednesday, would be a sign the market wants to back off into that 18-day average of closes, in my opinion. When we come over to XLI, you've lost the embedded reading. I think you're going down. Where? Likely target wherever that 18-day average comes in. You've got the trend down, lower highs, lower lows, momentum lost. Often, it's not always, the word is often, when you lose an embedded reading, unless you get it back right away the next day, price and the 18-day average try to come together. Again, I think money came out of this market today, and that's what you're dealing with. In the energy sector, let's talk about what's going on here because it's important. I did a piece this morning for Bloomberg, and it was about what I thought on OPEC in their TikTok section. And I was late with it intentionally. They wrote me, how come I'm late with the piece? And I said, I'm waiting for notice from OPEC to read it somewhere. Did they make a decision, or what are they going to do? Because the meeting began on Saturday. It was only supposed to run a day or two, ending originally now. Well, this morning they said they're going to postpone, they're going to push back the end of the meeting until tomorrow, December 1st, because they were having trouble with Russia and Kazakhstan wanting to join in and not increase production. They think that they've done enough. Well, as the meeting went on and during the day, you find out that the Saudis are jawboning again with Russia. Russia's been overproducing. They want Russia, Nigeria, some of the other countries, Iraq, that have been overproducing to make up. In other words, to take deeper production cuts in January so that the market gets rebalanced in a better way as the market heads into the spring and hopefully the end of this COVID situation. We know that demand has been strong out of China. Well, now they've pushed the meeting to Thursday. If it were going well, it wouldn't be a Thursday meeting. I don't know what to tell you on that. This loss here says that price is likely to get back to the closest moving average, the 200-day in the gray, might even get to the 18. QQQ, you're up against the upper Bollinger Band. What do I teach when you hit an upper Bollinger Band? The first time you hit it, you take some money off the table is what I teach. That doesn't mean I'm right, but that's what I teach. This would be the first time you hit it since all the way back here at the beginning of the month. I'll stay with what I teach. That number is 299.91, and today's high was 299.97. I think the pros took their money off the table. You finished 299.62. Do they have to take it all? No. But I think they took money off the table. I can't tell you how much and if they kept parts of their position. But I see what those algos do is these numbers get up there. There's a reason the markets back away. In EFA, another lost embedded reading. So we're headed into early December with momentum having changed. Now, does it stay changed? How long it stays changed? I don't know. Do I still expect a Santa Claus rally? Ho, I do. So I'm still looking at this, but I wouldn't be surprised you get down to wherever that 18-day average comes in. I think the smart money came out. In the gold, you just keep sinking away. I want to see the stats for the month of November as to how many people and how much money was taken out of this GLD. It's got to be monstrous. And I know that I got in my mailbox today from different analysts why 2021 is going to be different and why gold is going to come rallying back up. And I'm not saying they're right or wrong. Frankly, I didn't even read the report. I will. It's just, I just got it, but I was waiting for them to come. And this is from a well-known source, so we'll see what they have to say with it. I would look for between here and the 200-day average to get a bit of a battle going. Still have the embedded reading until it's lost. I think the pros stay short and keep pushing on that market. Where you could lose the battle on momentum is first in the gold miners. They're inching up here, still an embedded reading, but if it's lost tomorrow, then I'm going to be looking at that 35.46 as a potential number, about 80 cents higher in the market for the resistance point. If that gave ground, back to the 18-day average. Have we bottomed? Not necessarily, but you're getting closer to losing the downside momentum. And with the swing line turning up and that, some money's coming out of the short side of this market is what I'm seeing. TLT, too overbought in my opinion. Market's got higher lows, and now it could be setting up lower highs with that. Any close under 158.62 is bearish. And I'd be then looking for the market with lower highs, a lower low under that to be headed back to 155.32. And because you're overbought, I'm not going to be looking for a lot of support at 158.98. Overbought situations correct themselves by either breaking to get rid of it or embedding. It hasn't shown yet that it wants to embed, and now the question is it going to break? On FXE, what do you do the first time you get up to a Bollinger Band? In unison, you're taking money off the table. Overbought market, getting up there, why not walk away? You know, one of the things I use, you might wonder how I do timing on some of the markets. And there is a tool, and it's called the Arun indicator. I don't know if you've ever heard of it, but if you have, it's fascinating. Because what it does is it's going to look at time and price, which is different than what most traders think of. But if you think of the logic of it, is the market making higher highs, higher lows? In what time frame? Are those time frames getting shorter, longer? What does it mean for the trend? I put a video series together for you on it so that you learn how to work with this indicator, what the numbers mean, and you can even apply it on your own. Most of the charting services I've seen do have this. If you don't have it on your charting service, try ours. We'll give you a free trial to it as well. Go to www.IraEpstein.com, sign up for it there. We'll take it the rest of the way. I'm Ira. You have a great evening. I will see you all tomorrow.